Hello, Cryptoverse, and welcome to the Crypto Chronicle, where we rank ourselves from Jon Stewart on The Daily Show to Zuckerberg in Congress. I'm your host, Misho, and let's get started with this week's On the Road edition of our show. A new blockchain fund has been established in China with a total worth of $1.6 billion. That's right, with a B, to invest in innovative crypto startups. 30% of this amount is actually backed by the Chinese government itself through the city of Hangzhou. The Chang'an Global Blockchain Innovation Fund is going to be established to invest in these startups, and Hangzhou is very well known to support innovation and actually plays host to major tech companies such as Alibaba. Other big players making news this week are George Soros and the Rockefellers. Each of their venture capital firms made a big splash this week by announcing that their upcoming foray into crypto is very, very soon. Each of these firms manages $26 billion and $3 billion respectively. Now, this might not move the needle in terms of total market cap for crypto, but just the approval of these well-established firms might convince common investors to then add crypto to their portfolio, and so it might be the catalyst we've been waiting for. Jeffrey Sprecher, the chief executive of the International Exchange, owner and operator of the New York Stock Exchange, said this week that we can't discount cryptocurrencies. And he said this when he was asked about supporting future contracts very soon. Best quote from this story is, "People put more faith in a guy named Satoshi Nakamoto that no one has ever met than they do in the US Fed." Truth. And lastly, Malta, home to ancient temples, Middle Age artifacts, and soon to be home to the number 2 ranked crypto exchange by 24-hour volume, OKX. In addition to the number 1 ranked exchange, Binance, and their decision to join Malta, it's starting to get a little crowded over there. I might have to, if they make their crypto tax policies very good for common investors like myself, I might have to buy a little spot in the city of Valletta. That's right, look it up on a map, it's nice. Now to our main story. Instead of going over another event from the press this week for our main story, let's discuss the amazing pump Bitcoin had this week, where we crossed the $8,000 level in less than 30 minutes, and this was a jump of more than $1,000. Why did this happen? Is this a common thing? Was this purely TA, or did a catalyst make this happen? Let's dive in. On April 12th, Bitcoin jumped more than 13% in growth to break the $8,000 barrier in just a 30-minute period, which also brought the altcoin market up into the green. There are those around the cryptoverse that tried to declare this jump was due to this research paper that was published by a company called Blossom Finance. It's a company that deals with Islamic financial law compliant investments. In this paper, their internal Sharia law advisor concluded that Bitcoin does qualify as Islamic money unless a local government forbids the use of the digital currency. That's all well and good, but come on, do we really believe the 1.6 billion Muslims around the world ran to their computer, fumbled in their 2-factor authentication on Binance to get in and buy Bitcoin? I'm not buying it. Or is this more of a TA effect? Now, something that you might have heard of is something called the short squeeze. This is when a large amount of short players that are shorting Bitcoin are forced by a small bump in buying pressure to cover their short positions in fear of losing more. This mass exodus of short positions leads to an increase in buying pressure. For a short player to close their position, they need to place an order opposite in the form of buying. As more short traders cover their positions, other traders that are staying on the sidelines are watching. They see the increasing buying pressure, and then they might decide to jump in. And this snowball effect, like the one we just saw, leads to a pump. So that's probably a more realistic thing than saying one research paper out of one firm caused all of this. Internet, though. There are always postmortem discussions like this to assess was this regulation, a catalyst in the news, or even manipulation. But sometimes the simplest answer is the truth. And today, that's just traders simply wanted to cover their losses. Now for down the line. One believer in this last pump is the crypto hedge firm Pantera Capital Management. The fund that manages over $800 million in assets says the most recent price of $6,500 was the low of this bear market, and they expect Bitcoin to stay above that price for the majority of the year. I hope that's true, and Pantera, let's hope you are right. Of the altcoins that may have an interesting week is on-chain. The World Blockchain Forum is being held in Dubai on the 16th, and 6 projects are being built on the on-chain blockchain are expected to have their coming out party during that conference. Will this be a buy the rumor, sell the news type event, or will this news be so great that it induces a moonshot? And that's all, folks. Thank you all for joining us this week. Subscribe to the channel to remain up to date on the cryptoverse. Join the conversation on Telegram and Twitter as you see below. My name is Misho. This is the Crypto Chronicle, and I want to help you make smart whale money.